Yes, sir. Okay, so you are changing your previous stand. Okay, right. So now these will not help us to just say, as you told, right now 5 lakh is there in that company. Another company is having only 50,000. By looking at cash in hand or cash and the bank balances, we can't come to a conclusion the companies rich are doing better like that. So we need to see how that cash, opening balance of the cash has become 5 lakhs or 2 lakhs today, or 5 lakhs or 50,000 today. When I started my business on 1st April 2021, the first accounting date of the year. Okay, that time I had a balance of 50 lakhs. Now that has become 5 lakhs. That time also I can't say, oh, you have made 50 to 5. I can't say how that 50 has become 5. I have to analyze. Similarly, I had only 1,000 rupees when I start my business in this accounting year. Now I have 50,000 rupees. So 1 to 50 times I have made to increase. That also is not a good parameter. Not a good parameter to say the company is doing better. So we have to analyze how the cash has come in, how that 5 lakhs has become, 50 lakhs has become 5 lakhs, or how the 1,000 has become 50. I have to analyze. Okay, so to analyze the cash inflow and outflow, we have a technique. That technique is called as, or that tool is called as cash flow analysis. Okay, but the result of that cash flow analysis, with the base of that cash flow analysis, we prepare a statement from where the money came in to where the money gone out. Okay, we prepare a statement of inflow and outflow. That statement we call it as cash flow statement. Okay, now I'll come to the question what I asked you before 2-3 minutes. For a business organization, for a company, from where and all cash inflows and outflows take place? What are the transactions from which the company is supposed to pay out, or the company is supposed to receive cash? We'll take one thing first. Inflow we'll take.
Share investment.
Which one, sir?
Number
share
of
investment. What is that share investment?
The number of share company that was that people buy. That will also be investment.
Suppose tomorrow morning, 10 o'clock, I am buying some 1,000 shares of Infosys.
Yes.
Will it result in cash inflow to Infosys?
Not sure, sir, but
not sure. Please make it very clear. It cannot. It will not. I am buying the share from Mr. X. It is going to be the cash inflow for that Mr. X only. I am the buyer. He is the seller. Okay. I am buying 1,000 share from Mr. X. I have to pay the value of the share to him only. Okay. Irrespective of where the company is, or other parameters are not able to consider. The Infosys stands there. That's all. It is remaining as it was previously. Okay. What was his position yesterday? The same position will be there. This transaction will never affect the cash inflow to Infosys. To correct your point, or in the same line, if you think, if Infosys issues fresh capital, selling of shares by the company itself. Now, you are starting a company. Okay, you are issuing equity shares to the public. That time, investors are buying the shares from the company itself. Okay, that's called IPO, initial public offering, IPO, or FPO, follow on public offering. The company is already existing. Now they want money. They're calling the general public. Why don't you support us by giving some amount? Why don't you take some stake in our company? They're ready to dilute their shares, dilute their stake in the company, the promoters. Okay, so from that they collect money, of course, true. So cash inflow, one of the examples is issue of shares. Issue of shares by the companies. Issue of shares by the company. Please write it down. Issue of shares by the companies. Top, you write it, cash inflows. Example for cash inflows. It's very simple, but you have to understand from the company's point of view. That's all. You know, you may think that's our cash inflow and outflow. What we know is correct, but technically we have to write that transaction. That's all. So cash inflow. Example first one is issue of shares. That share may be any type, equity share or preference share, whatever it may be. Issue of shares by the company. Okay, that's one example. Okay, good. Next, anybody? Sales, but all sales will result in cash inflow. So we have to be very specific, cash sales. Yeah, somebody from the classroom, they're telling sales made for cash sales, cash sale. That's very, very normal. First one, what we've taken is once in a while or only one time in the lifetime of the company that may take place. But this is very routine, regular, normal, day to day. That's the main cash inflows of any companies. Cash sales of goods or rendering of service for cash. Okay, suppose it's a service company, rendering of service. Good. Credit meaning? Okay, so you'll technically in your company you'll call that credit accountant, but we generally say receipt from layman understanding. Okay, receipt from customer. Receipt, third one, one of your classmates in the class is telling receipt from collection from debtors. Third one is collection from debtors or receipt from debtors. Okay, customer becomes debtor here. We already sold goods on credit basis in the month of March. In April or May, we are collecting back that amount. Yes, that's also one of the major receipts of a company. Major receipts. Okay, anybody from online?
For example, advance received for a goods.
Okay, advance received from customer.
Yes.
Okay, the next one, advance received from customer. Okay, good. Anything else?
Loan amount.
Very good. Loan from banks or financial institutions or from anybody. Loan. Okay. But you're getting a loan means how are you getting it? You'll get the hard cash only, or it will be there in your account. You can take that. See here, you remember I told you bank and cash both are put together. We call it as cash and cash equivalents. If you say cash flow, we refer both. The cash may be hard cash or it can be bank notes, check, okay, or it can be account transfer. Instead of you keeping in your company's locker, you are keeping it in the bank account. Of course, we are asked to, or we are supposed to do transactions only through banking system. So we are keeping the money there. That's all. So both are same only. In this context, cash and bank, we refer both together. Yeah, next. So,
donation for the trust.
One second, sir. One of your classmates is here in the class telling sale of assets, sale of old assets for cash. Sale of, very good. Sale of old assets for cash. Suppose we're having some furniture, you are having some machinery which is not useful further for you. So you just scrap it out. From that you will get money. Yes. Sale of old assets for cash. Good. Yeah, now you can say. Somebody was
donation for the trust created.
Which one, sir?
Donations received for the trust created.
Donation received for a trust created. Why are you creating a trust?
No. Because it's like for CSR activities of companies.
CSR activities, nothing but you have to pay from your profit. You cannot create a trust and you can't take money from donors and then you cannot say that is your money and you are spending for the society.
For example, Infosys has a trust, right?
Yes, it is having. Infosys Foundation is there.
Yeah, then cash received.
If you pay donation to Infosys Foundation, that is not the money received for Infosys Limited.
Okay.
Infosys Limited should pay money to Infosys Foundation, actually.
Okay.
Yeah. Next. Yes, madam.
Yes, sir. Profit received from the quarterly results.
Profit received from?
Quarterly results or.
Quarterly result. How do you receive profit from quarterly result?
Like with the day-to-day transactions.
Please understand, all of you, don't confuse. Profit is not received from anywhere. Profit is part and partial of your sales. You are selling, you are taken two things you are taken. Collection from customer as well as cash sales. From these two, the profit is automatically flowing in. Suppose you sold a goods for 20 rupees, which was costing you for 15. Cash sales will be 20 rupees. The 20, the profit is also included. You can't just go and buy profit or take profit or receive profit from anywhere. It's a simultaneous transaction, inherent transaction. Profit is to be found out. Profit is not received from anybody. Okay, madam. So profit is not a cash at all. First of all, please understand. Profit is not a cash. It can be in any form. Debtor account, debtor balance is there. In that balance also profit may be part. Sales is there. In sales also profit may be a part. Okay, so profit is not a cash inflow or cash outflow. Even loss means, it does not mean that some money is going out. Already you made some commodity for 20 rupees, but you have sold it for only 18 rupees. So you're ending up with a loss of 2 rupees. That's all. Yeah, profit is not a cash inflow, neither a cash inflow nor a outflow. It's an inherent transaction. Anybody?
Sorry,
Yes, sir.
anything like service agreements?
Yes,
like
sir.
fees received for service agreements like AMC's annual maintenance contract kind of thing.
Anybody? Annual AMC, annual maintenance cost you're talking about.
Yeah.
You are receiving AMC from your customer.
Yeah, amount will be received if we are giving them the AMC. For example,
But normal business, they won't get any AMC from customer. No. Who will get AMC?
if for example, if it is in automobile or if it is like a water purifiers, they will charge for the AMCs, right?
Okay, suppose, yeah, you are buying a bike or car, that automobile company, they're charging some amount from the customer. For maintenance or something. Okay.
Yes, yes.
So that's nothing but sales. Or if you want specifically, you take another word called cash received from customers for rendering service. You name it AMC, somebody may name it MMC, somebody may say it another word, no problem. But cash received from customer for rendering service. It can be any maintenance charge. Okay. Anybody else? Interest received, please write down. Interest received. Sometime what happens, you are supposed to maintain some deposit. Deposit, always we think it's out of surplus, but it is not so. So many times. Industrial licensing is there, no? That time, your authority will ask you to maintain some amount of money in the bank as a security deposit. Suppose college. Simple example. College need to maintain some amount in the bank as a deposit. UGC will ask this. Okay. Similarly, insurance companies. Somebody is there? Okay, we have to keep the door open. Yeah. Yes, please come. Okay. So bank, you take an example. Insurance companies. Okay. So many other business organizations. They're supposed to maintain some amount of deposit in banks. For that, we can't withdraw the deposit unless otherwise you close your business. But every year the bank will give you some interest. This is one side. Another side is, sir, I have so much of money. Right now I don't want. I have just parked it in some of the banks FD account. From that I'll get some interest. Good. Interest received from investment or interest received from deposits. Yeah.
We can invest in some of the company's shares. So shares.
Yeah, dividend received from investment or simply return. Dividend is only specific. It can be interest also. Okay. Return from investment. Return from investment. Example, you as a company have some surplus money, but you bought the shares of some other company for time being. Okay. We are not talking about mutual fund companies, insurance companies. We are talking about normal business organizations. Their job is not to invest. Their job is to do some business. Okay. Suppose tire manufacturer, Apollo Tire. They have some enormous profit in a particular year, but they are having a plan to open one more plant in the next year. If you give this money today to your shareholder in the form of dividend, okay, you can't collect it back, or you have to go to the market and you have to collect it again, or you have to go for a loan. So they are time being keeping that money. Instead of keeping the money in the business, it will be over capitalization. They have so much of money. So they keep it in temporary record, 6 months or 9 months, treasury bill they buy, something like that. Okay, in that they'll get interest, dividend. or any other name you can call it as. In general, return from investment. Later on, when they need that money, they will just disinvest, get back. Okay, good. Yes, but that is very rare of rarest. But anyway, claims from insurance companies. Cash received on the claim from insurance companies. Very good. Cash received on the claims from insurance companies. If there was an accident, if there was any loss, the compensation. If you have taken a policy, of course, you are eligible to claim. You are lodging the claim and the claim is settled for you. You are getting cash in the bank account. Okay, good. Anything else? Yeah, it depends upon the business. Suppose your business is of trading nature. If you are a trader, broker, or you are a mediator, that time commission you will receive. Yes, commission received. Commission received. Good.
Patents awarded.
Sorry, sir.
Patents awarded. Cash.
Okay, suppose you are a patent holder, you are giving a license to someone else to use that patent, you are getting some money from them, even royalty, patent, copyright, all those things. Okay. But all companies may not have. If your company is having a patent, suppose you are a pharmaceutical company, okay, Reddy's Lab, they found out, they invented something, they taken some new formula, new drug they are having. They wanted this one to be given to others to use. They themselves will give. Okay, patented one I only should use. But if I want, if others are ready to pay some amount, there's no patent. No, why we take a patent? Others can also use it, no problem, but they can't claim that is their own. They have to give some patent amount to the patentee. Okay, right. That's good. Fine. Anything else?
A new partnerships, investment.
What is that, sir? No?
Like for example, if any
Okay, new partner is bringing capital.
Yeah.
Okay, now we are talking about company. So that's what the first point we have taken. Issue of shares. It's similar to that. We are not talking about from the point of view of partnership. We are talking from the point of view of limited liability companies. Okay, so the first point is the same one what you are telling. Yes, good.
Government.
1 second. Yes, madam. That's what before you come, we have taken the first point. That is issue of share capital. So same, similar. Yeah. Next, anybody? Grants. Grants we are talking about. Yes, that's another example. Yeah, grants and grants. Okay, subsidy is different. Grant in aid. Grant in aid by governments. Grant in aid by government. Suppose you are starting a company in a special economic zone or underdeveloped area or any of the industrial corridor, something government is developing to develop or to promote the industrial activities of the country. Okay, so in that grant in aid possible. Yes. In general, anything else? That's all. We have taken so many. Okay, but mainly thing is collection from debtors, collection from cash sales, and then the new capital introduced. These are all the very common things. Okay, another one, issue of debentures. In company, you told no, but taking a loan. The loan is from a bank. But issue of debenture means borrowing from general public. Borrowings from general public. Issue of debentures. Issue of debentures. Okay, anyone last? Anybody has any other point? Those are online. Issue of debentures. We are not written so far. Issue of debenture means you are issuing a document to the general public and you are promising that you will give back that money after that number of years. Till that you will pay some certain amount of interest. Okay. The person who is buying. One second. The person who is buying that is called debenture holder. The document, the paper, what we are giving to them is debenture deed. Okay, in that every detail will be there about the company. Okay. Yes, sir. Now.
Yeah, getting refunds if any transaction cancelled, that is a cash flow.
Okay, getting refund. Yeah, refund. Refund from report. Getting refund is very rare or difficult also. Okay, anyway, but theoretically, yes, you are right. Refund from our supplier. Refund maybe from supplier or some licensing authority or even government we paid something. A tax refund will come. Yes, every year it may be there because they are taking more from us, then we'll calculate. They're telling only thing. Okay, yesterday there was a good announcement. No? Nirmala Sitharaman was telling, yeah, per kilometer maybe some 0.1 paisa will be reduced. No, something, yeah, an announcement was there. Okay, they are going to reduce the excise duty on petrol. Yeah. So that's good news. Yeah, but tomato is telling I'm 100. I am competing. Okay, no problem. So government is taking tax from us, corporate tax. Okay, every quarter you are calculating how much is your profit. So based on that advance tax you are paying, advance tax. Then later on assessment. Somebody may be working on assessment. So assessment is done. So we come to know this much is the tax, but already we paid more. So we can get back the refund after filing the income tax return. Good. Return. Otherwise, any other form of, yeah, yes. Anything else? Okay, so these are all the various ways in which a company can get cash into the company. Okay, next, outflow. In general, what are the ways in which the company is supposed to pay money outside, or company is paying money outside? Yeah, very basic is very general. Okay, purchase of goods for cash. Maybe a raw material or stock in trade or any other stores, something like that. Sorry? Yeah, payment to suppliers, creditors, payment to creditors.
Even the salary is counted, sir?
1 second, sir. Those are online. 1 second. One of your classmates is speaking something. Yes, sir.
Purchase of good, we have to make a payment, right? Why we have to separate this?
Yeah. Why, madam? You are only separating two. Yes, sir. 1 second.
Payment to creditors and buy it on the credit. We buy it on credit.
Yeah. No, but he is asking both are same purchase only. No, then why are you dividing into two? Time is different. Yeah, time is different. Time is different. Today you are paying money and buying. That is today's payment. Again, in the afternoon you are buying something that won't come here because you are not paying any cash. After 2 months, you are paying cash for the second purchase. Third day, the cash paid for suppliers will come. Or same date, you are buying for 10,000 rupees. Okay, and you are paying that for that you paid cash 10,000. Another supplier who has supplied to you a month ago, you are settling him 1 more lakh. That's supplier B. First supplier A. We bought goods by paying 10,000. That's the first one. Purchase of goods for cash. Second one is payment to suppliers or creditor, means the another supplier or maybe same supplier we bought long back, a week back or 2 weeks back, depending upon the terms of credit. We are paying some money. That's different and this is different. Okay. Yeah. 1 second. Somebody was telling from online. Yes, sir.
Dividend paid?
Yeah,
And
dividend
share.
paid. Our shareholders are there. Look at the first point in the receipt. We have issued share capital, no? We collected money from shareholder. For them, we have to give some return. That's called dividend. Payment of cash dividend. Payment of cash dividend. Good example. Purchase of assets for cash. Purchase of asset for cash. 1 second. Purchase of asset for cash. One by one. Purchase of assets. Some machine or plant or some other thing you are buying, furniture, computer, etc. You are buying for cash. Okay, now you told rent paid, right? Somebody told from there. Rent paid, yeah. If I start this rent paid, then everybody will tell 1 by 1. Rent paid, commission paid, interest paid, tax paid, salary paid, wages paid, coolie paid. So many paid is there. So rent paid, then you take all the operating expenses. Yeah, operating expenses paid. Operating or overheads paid. Okay. Rent is an example. Maybe rent, electricity, telephone charge, mobile bill, whatever it is. All the thing paid in cash will be an example for cash outflow. Next.
CSR contribution?
Yes, sir.
CSR contribution?
Yeah. You are more into CSR, but anyway, it's true. We have to 2% of our profit we are contributing to CSR activity. How do we coin that here? CSR activity is very common. Yeah. Okay. Cash spent on CSR activity. Okay. That won't come under the previous one. Rent and all is different and this is different, right? Yeah. Every year it will be there. Definitely it will be there. You might have given some amount for bus shelter or a school, some kind of initiatives. Okay. What these bigger organizations that they are doing is they themselves found a foundation. Others, what they would do, they just do it for normal purpose. But instead of doing that every year they are supposed to do it. So why do we do it in others' name? Why can't I do it on my own name? That's why all these foundations are there. Okay, next. Good. CSR activity amount spent. Okay, anything else?
Sir, interest on deposits?
Interest on deposit. What do you mean by interest on deposit?
Company deposit amount, if we deposit amount in bank or anywhere, it will get a interest, right?
Who will get interest?
Company will get the interest.
Yeah, right. You are right. Why you are bringing that here? What we are discussing now? We are discussing about cash outflow. What you told is cash inflow that we already recorded. Yeah, yeah. Good.
Okay.
Yeah, yeah. Interest paid on bank loan. Please write it. Interest paid on bank loan. Interest paid on bank loan. Okay. Anything else? Quickly, this is not a tax paid. This is not list what we are going to study, but from this we are going to have some understanding. So please quickly we'll close this list.
Will be included to author license.
1 second. Tax paid, you keep it. We'll consider that little later. Tax paid, yes, sir.
Paid for license.
Yeah, paid for licensing. We are going to get a license. Legal charges, licensing charges. Okay. Anything else?
Maybe
You are a typical. You are all typical
acquisition.
businessman. You are not doing one thing. So many things you return, but very important thing you are not return. Typical businessman. Think it up and tell me, yes, sir. By the time we'll hear from this gentleman. Yes, sir. Please tell me.
Accreditation charges.
Which charges?
Accreditation charges like ISO quality board accreditation and
Okay, accreditation charges. Suppose college is there, NAC is coming. Like that, you are having quality assurance. Okay. I want to get ISO or something. So many certifications are there. No? Accreditation charges or certification charges. Fine. All these things you are concentrating, but basic thing you are forgetting. What is that? Typical businessman will be like that only. I want to improve my business. What is investment? You already told no, you already bought asset no. What else you want to invest? That is also again businessman mentality only. Basic thing, honesty. Okay, payment for advertisement, rent, everything. There it comes. Rent, there you can go / advertisement. Okay. One important thing.
Salary, sir?
Salary, okay. Rent / salary / commission / whatever you want. Telephone bill, everything. That's okay. Salary is taken care. Otherwise, your employee will come and ask you, already told, in rent paid. At the same time, salary also paid. Taken. Salary paid, taken, sir. Well taken. Yes, sir?
Tax.
Tax paid, okay. Good citizen, we already taken. Yes. Tax paid is taken. One important thing, please think it.
Payment to supplier.
Sorry, sir?
Payment to supplier.
Which one to supplier? Payment to supplier is taken care now, already taken care. Payment to creditors, supplier or supplier, both are same.
Asset management.
At least you are happy that you are paying back to your supplier. Yeah. Yes, similar line you have to think. Yes, sir. Sorry, you are telling something.
Asset management charges like electricity bill.
Yeah, electricity bill, maintenance charges. Okay.
Taxes.
Taxes. Which tax, sir? What tax you are talking about? Already we are so much taxed. 3 times we talked about tax now. Tax already taken, sir. Please understand. The tax is taken. We are listed out already. Tax paid. One important aspect. If I say one name, then you will tell that answer. Yeah. Anybody? Sorry, sir. But sir told already. Asset. Purchase of asset is something but property purchase. I want a room to run my business or a machine to produce. That's taken care. Yeah. You are all thinking about your improvement only. One important aspect you are forgetting. Sorry, sir. Sorry, madam. That's okay. Okay, you can take it. We talked about now. If the surplus money will buy equity share of other companies. That you can write it. Making investment in other companies' equity share. Buying of equity shares of other companies. Or buying of any securities. That's okay. I'm not talking about that. That's okay. This is one. Yes, sir.
Dividends paid out.
We taken no dividend paid was third one, I think. Third one we have taken.
Taken. Oh.
Yeah. One important last one. Cash received is received now. Vijay Mallya, if I talk, you will tell. You taken loan now, have you repaid it? Only interest you are paying. At least interest you paid. Thank God, that is okay. But you have to repay the loan, no? Repayment of loan. Everybody will forget. I know. Yeah. Normal.
We are paying interest, sir.
Yeah, we are paying interest. So business is going on. But we expect your business to generate more than interest. You remember we studied interest coverage ratio. All the time you should not be only paying interest. Debt need not to be always served. Debt need to be one point in time to be settled. Serving of debt is good. That tells about your liquidity. Settlement of loan is talking about your solvency. Okay, liquidity is important, but always being liquid is not good. You have to be solvent also. Solvent means what? Repaying the long-term loans. We issued debenture. Have you taken issue of debenture?
Yes, sir.
Issue of debenture. Have you taken? If not, please take it. Issue of debenture. Issue. Sorry, wait. Issue of debenture. Already taken or cash inflow. You taken. So repayment of debenture. Redemption of debenture. Redemption of debenture. Repayment of loan is one item. Another one is redemption of debenture. What is redemption of debenture? Settling the debenture amount to the debenture holder by receiving their document. We borrowed in cash inflow. We just given back. Okay, 10 years. Suppose debentures, again, loan is also time bound. You can't always pay the interest. Loan is also time bound. Okay, debenture is always a time bound one, 10 years, 15 years, 20 years, or 5 years. At the end of the 5th year, if it is a 5-year debenture, at the end of the 5th year, you have to settle the debenture holders. Okay, I am paying interest now. Why don't you keep quiet for some more time? Then your solvency is going to be questioned. So better what you can do, businessman, what they will do? They will borrow from somebody and they'll give to the existing debenture holders. Okay, or they themselves will be renewing the contract. Okay, 5 years have taken the money. Okay, if you are happy, please we'll extend that one more 5 years like that. Okay, so these are all the various inflows and outflows we have taken. Okay, this is not the point we have to understand. This is very normal, we all know. So we gathered all those points now. What we have to understand is how the cash flow is coming in. I mean, how the cash is coming in and how the cash is going out. We have taken in this cash flow analysis or in the inflow and outflow of cash. We have some nature of inflows and outflows. For what purpose it is coming? You have a list. Inflow also you have a list. Outflow also you have a list. But this cash flow statement or cash flow analysis technique is classifying the entire inflow and outflow into 3 categories. Now, all the inflows are not similar. First inflow is coming from issue of equity share. Okay, another inflow is coming from bank loan. Another one is coming from sales of my goods. So there are different nature of cash inflows are there. Similarly, different nature of cash outflows are there. So we are going to categorize these inflows and outflows into 3 categories, into 3 major categories. Please write down categories of cash flow. Categories of cash flow. Categories of cash flow. There are 3 categories available. Anybody remembers those who studied in BCom or BBA or those who making in your regular life in your company? Anybody? How can we classify these into 3 categories? Any similarity, dissimilarity or finding between the list of items what we have in the inflow as well as outflow? One we already disclosed. One I already disclosed. When I talk about rent, I just told one word, that is operating. Please write down. Operating activity. Point number 1, that is operating activity. What is operating activity? Simple definition or simple understanding of operating activity. What we can regularity is one of the characteristics of operating. Correct. Good. Day-to-day operations. Regularity or day-to-day operations. Okay. Any other qualities or characteristics or features of operating activity? How do we understand, sir, these activities are operating activity? Suppose every day I'm going and borrowing money. Will it come under operating activity? So regularity is one of the components, but regularity is not only component. But the rare of rares, I'm talking about exceptional organization. It's not a regular one. Nobody will go and borrow every day. It's not possible. Recurring and regular, recurring, good. Again and again. Recurring means again and again. Yesterday also I received money. Today also I'm receiving money. Yesterday also I paid. Today also I'm paying. Last month I paid rent. My landlord is coming and asking me, sir, rent. Sir, April 1st only I pay. Now, where are you coming again? I can't say. Every month I have to pay rent. If it is yearly basis, every year I have to pay. So that's called recurring. Good. Recurring, regular, day-to-day operation, day-to-day activity. Any other nature of recurring activity? Operating activity? Fixed variability, you can't bring it here. No. Maybe it can be fixed also, it can be variable also. We can't categorize in that level. Operating activities are those activities, okay, which are the core of the business, which are helping to the core activity of the business. Selling of good is the example for operating activity. Purchasing of raw material is the example for operating activity. If I am a manufacturer or I am a trader, without buying something, I can't manufacture anything. Without buying anything, I can't sell anything. Okay, in both cases, trader and manufacturer. So helping to that or doing that is called core of the business. For our Dayananda Sagar University, okay, fees collected from various programs will be an example for cash receipt of operating activity. Suppose Dayananda Sagar University is sponsoring a road show or there is a cycling to make an awareness. Okay, somebody is going to do some activity, cycling activity, 30 kilometers they're going to cycling. Okay, for that we are sponsoring something, a van or an ambulance. Okay, like that, or food or some drinks we are sponsoring. That is not a operating expense. Without that also college can run. Similarly, companies also. Okay, one thing, operating activity. Point number 2. Point number 2. Investing activity. Investing activity. What is investing activity? The activity which results in blocking of some amount in the fixed assets. Buying a fixed asset is an example for cash outflow of investing activity. Those who are online, can you get me? The investment made in a construction of a building. You are buying a building or you are constructing a building. You are buying furniture. You are buying some machine. All these things are example for cash outflow of investment activity. Similarly, you are selling one old asset. That's an example for investment activity, but inflow of cash. Activity results in creation of fixed asset or disinvesting of fixed assets. Both. Okay, plus minus. Anything related to fixed asset, anything related to investing outside the business, called as investment activity. Creating assets or what is that? Disinvesting or selling a fixed asset. Selling a fixed asset. Okay. So these are all example for investing activity. Suppose I am buying a land to construct my own factory. So the purchase of land by paying 2 crore. What is the activity? Investing activity. Okay. Next, third one. What is the third one? Operating, investing. Third one is financing activity. Financing activity. I think our time and their time is not matching. Should we match it? No. Okay. Fine. So next one is financing activity. What is financing activity? To invest, to buy, I need some money, right? To buy a land, to buy a piece of land, to buy my machinery, I need some money. Where the money comes from? That money comes from capital or loan, all those things. So anything which is relating to creation or decrease of liability, long-term liability, that's called financing activity. Financing activities are those activities connected to increase or decrease of long-term liabilities. Example, issue of share capital. Collecting money from issue of share capital is an best example for cash inflow of financing activity. Clear? Suppose repayment of bank loan. What activity it is? Cash outflow of financing activity, not financial, financing activity. Now we have 3 activities. Okay. Next, we have to learn about cash flow statement. So these are all background. Now, cash flow statement is a statement which depicts or which shows the cash, opening balance of cash, how it has become the closing balance of cash. Suppose 2020-21 balance sheet. In that, cash and cash equivalent is there. Suppose 5,000. 2021-22 balance sheet is there. In that balance sheet, the cash balance is 50,000. Please imagine there are 2 balance sheets consecutive years, same company. Previous year closing balance of cash is 5,000. Current year closing balance of cash is 50,000. Now we as an analyst is going to prepare a statement to show the various reasons how and why the 5,000 opening balance of the cash and cash equivalents of the current year has become 50,000 at the end of this financial year. How and why? That we are going to tell. When you're going to tell how and why, we are going to tell in these 3 categories. We are not going to just tell a open plus minus. 5,000 would have become 50,000. Somebody has given you 45,000, or somebody given you 1 lakh, and there are some outflow. Okay, 1 lakh plus 5,000, 1 lakh 5,000, but it is there only 50,000. So some 55,000 is gone out. So 55,000 is gone out. Not telling it just a common item. We're going to tell one by one. How that 55 is from these 3 activities. How that 50 or how that 1 lakh came in from which activities. Okay, that's what we are going to do. Okay. Please take one statement, then we can go for a break. Cash flow statement. Heading cash flow statement. After the break, I'll show you the PPT and we can do it. Cash flow statement. Okay, simple. You take a particulars and amount. Particulars column, amount column. Particulars column, amount column. For simple example, we'll write it. Another format I'll show you. Okay. First one in particulars column, opening balance of cash and cash equivalents. Where you can find this? Previous year's balance sheet, closing balance is nothing but the opening balance of the current year. Okay. Opening balance of cash and cash equivalents. What I mean by cash and cash equivalents, bank balance and cash balance put together, we're bringing it here from the last year balance sheet. Plus, next particulars column, plus net cash inflow from investing activities. Yeah. In particulars column only, you would write plus net cash flow from investing activities. It can be plus or minus. Sometime you can write it plus or minus. I told you plus, no. It can be plus or minus. Why do I say plus or minus? Suppose inflow is 1 lakh rupee from investing activity. Outflow in investment activity is 1.5 lakhs. That time, how much you will take in the amount column to take a total? Inflow from investing activity is 1 lakh. Outflow from investing activity is 1,50,000. Then what is the net cash flow? Minus 50, you have to take in the amount column. That's why I written plus or minus. Next, again plus or minus. In the amount column, just write a tick mark symbol. There's some amount when you're doing a balance, statement, you will write amount. Now only format. Next, plus or minus what? Net cash inflow from, sorry, net cash flow. Net cash flow from financing activity. Financing activities. Okay. Here also same logic. Not necessarily all the time to be plus, not necessarily all the time to be minus. It is depending upon the inflow and outflow. If outflow is more than the inflow, we write minus. Other way, we'll write plus. Next, last one, plus or minus net cash flow from operating activities. Net cash flow from operating activities. Similarly, you write the amount in the amount column, as tick mark, you write it. Okay, now how many amounts are there? How many number of amounts are there? 4 are there. Just we take a total. Okay, with the symbol. Okay, suppose minus plus whatever it is. Take next last line. After adding all these things, after adding all these things, you will get some amount. That is called, yes, closing balance of cash and cash equivalents. Closing balance of cash and cash equivalents. I repeat it. We start the cash flow statement with opening balance of cash and cash equivalents by referring the previous year balance sheet. We take that amount. Then from the balance sheet or from the profit and loss account or from the information available to us, we found out. We'll go to find it out. How much is the inflow and outflow of respective 3 activities? Add it. You'll get the closing balance. Now that closing balance also will be there in the balance sheet. You are not just finding out here. Where the closing balance will be there? Current year balance sheet, you'll have the closing balance. What you are getting from the cash flow statement and what is there in the balance sheet, both should be same, one and the same. That means 5,000 has gone through so many activities and has become 50,000 in my example. Okay, why do we do this? We want to know what are the ways in which in these 3 categories the cash flows are happening in a business. Suppose in a particular year, inflow is more in the financing activity. Okay, there is nothing happening in the investment, meaning you have created loan, you have created some liabilities, but you are not properly utilizing that into your assets. That's one finding you can have. Other way around, take an example, operating activity, always minus is there. So many 5 years cash flow statement you have done. Operating activity always minus or it is very less, meaning the company is not performing good. Financial performance of the company, business performance of the company, operational performance of the company is poor. Okay, investment, how it is taking place. So we have to analyze this. For that purpose, this tool is available for us. Okay, we'll take a break now. What's the time now, sir? 11. No problem. We'll take some 5 to 10 minutes break, then we can start. Thank you. Those who are online, just to break for 5 to 10 minutes, then we can reassemble. Anybody is there online? Can you hear me?
Yes, sir.
Okay. Right. Take a break and we'll again start.
Okay.
Okay. So those are online. Can you hear me and can you see the slide now?
Yes, sir.
Okay. So same thing, whatever I told, that is being guided by accounting standard 3, otherwise Indian accounting standard number 7. You all know we follow accounting standards. Each and every country will have its own accounting standard. You remember in the beginning we talked about accounting concepts and conventions. The very beginning. Okay, concepts and conventions are those guiding element and guiding principle upon which the framework of accounting is constructed. Or I don't know. The recording is done. Yeah, it's on only, no? It's on. Okay, so just to recollect that concept of accounting concepts and conventions that guide that act as a guiding element of entire accounting framework. Now, each and every country will have its own, what you can say, some custom. Okay, that need to be standardized. So, standardized customs of accounting principles are called as accounting standards. Each and every country will have its own accounting standard. We have our own accounting standard. But in the globalized economy today, we face some problems if each and every country follows their own accounting standards. Suppose you being in India would like to invest some of your money in American stock exchange. You want to buy one company which is listed in America. Similarly, a person who is in Europe would like to invest his money into Indian stock market. Now, before you invest your money, we will see the company's performance. How do we see the company's performance? Only through these two statements, that is balance sheet and profit and loss account. The companies are reporting their performance only through these two statements. So when you look at the statement of a company which is listed in India, previously those statements were prepared according to the Indian accounting standard. Similarly, if you look at a company which is listed in Europe or in USA or UK, their company's balance sheet will be according to their standards. Now, comparison, if you want to compare, there should be a common base. If there is no common base, then comparison becomes illogical. Logical comparison cannot be there. I request those who are online, please go on mute. Okay, so if you don't have the common base to compare, then performance of one company cannot be just analyzed or compared, or we can't say this company is better, that company is not better or poor. So to have a common platform, we bring this concept called International Financial Reporting Standard, IFRS. International Financial Reporting Standard. Okay, please understand. First stage, evolution of accounting principles. First stage, just we have accounting principles, okay, concepts and conventions. Then we have generally accepted accounting principle called GAAP, GAAP. After that, each and every country has their own accounting standard. Now the need is something different. Cross boundaries, cross countries investment. Okay, that necessitates a common measurement tool or common accounting mechanism. So that mechanism is achieved through this concept called IFRS. Okay, in India now, after this IFRS is adopted, we are not just taking it and adopting it as it is. We are not blindly adopting it. There's a board, international board. That board is preparing this International Financial Reporting Standard. Okay, that can be adopted by any member countries. India is also one of the member countries. We are supposed to adopt. We already accepted. We will adopt it. We are adopting it. But while adopting, some countries, what they are doing, they just take it and follow it. That's all. They don't do anything alteration. But in India, we are not just like that. We are taking the IFRS, going through it, wherever a change need, depending upon our own custom and country's requirement, we change it. Okay, the changed form of IFRS which we are following in India is called as IND-AS. Previous to adopting of IFRS, we just call accounting standard, Indian accounting standard. Okay, now that is just AS. Okay, previously it was number 3 was talking about what is cash flow statement, how to prepare the guiding principles. Okay, now it is IND-AS 7 in India is talking about cash flow statement, how to prepare a cash flow statement. So far we discussed is very common theoretical aspect. Here and there some requirement based on the IFRS we have to follow. So suppose you are a company which is following which are supposed to follow IFRS, you have to prepare your cash flow statement only according to Ind AS 7. Previously it was called AS 3. Now it is called Ind AS. IND means Indian Accounting Standard. Okay, according to AS 3 we have to prepare cash flow statement. Okay, just to take you through this PPT, we already discussed all those things. We'll see. Yeah, I told you the introduction and concept of cash flow we discussed. Cash and cash equivalent I told you. Inflow, outflow we discussed. Cash flow statement. What is a cash flow statement we discussed, and we have written the basic format also. Classification of cash flows. We already classified into operating, investing, and financing. Okay, then we are going to prepare cash flow statement. While preparing a cash flow statement, there are two methods we can follow. One is direct method and one is indirect method. What is direct method means? Instead of preparing a cash flow statement after the financial reporting is done, we prepare simultaneously along with the trial balance, along with the regular activities, regular preparation of balance sheet and P&L account. We prepare cash flow statement also. In that, the format what you have taken cannot be followed. Okay, but majority cases, according to Ind AS also, we follow only indirect method. Actually, it's a tool to analyze the financial statement. There is no meaning you just to analyze when the class is happening. Suppose I want to conduct an exam, I want to test you. When can I do? After you finish your study, on a given day, I can give a question paper and I can ask you to write a test. I can assess your learning. That is simple. Instead of that, every minute, the activity is happening, simultaneously testing also happening means it won't be conducive. So nobody follows direct method, everybody follows indirect method. What I mean indirect method, after you complete your accounting cycle, you prepare your P&L account and you prepare your balance sheet. After these are done, we sit for the analysis. So for us, in indirect method, to prepare cash flow statement, the base is balance sheet as well as the P&L account and some of the information what we need. Okay, if you do so, that method is called as indirect method. After you finish these financials, accounting cycle, if you start analyzing, that is called indirect method of cash flow statement. We are going to do in another few minutes one question under indirect method only. Okay. Okay, before this, you look at this accrual base of accounting. This only is necessitating the base for cash flow statement. We find out profit or loss even without you receive cash. You sell it for credit. That's called accrual accounting. We are not only recording the cash transactions in the journal. You remember? Purchase also, sales also, even salary also not paid, we are recording it. Okay, that's called accrual base of accounting. The accrual base of accounting is necessitating the analysis of cash flow statement. If you have your accounting under cash basis, we need not have cash flow statement at all. But no company is following cash basis, because cash basis means you record only those cash transactions. But that's not possible. Okay. Always profit is not going to be in only cash. Okay. Inflow and outflow, net cash flow we discussed. Need for a statement I told you. Okay. Directly we can. Sorry. So cash flow statement, the meaning, it's a statement which shows the sources of cash inflow. We written already. Source of cash inflow and uses of cash outflow of the business organization during a particular period of time. The particular period of time is 1 year. Okay, normally it's 1 year. But you can prepare before, with a shorter duration also. Okay. So it's a statement which involves only short-term financial position of the business concern. It talks about short-term. Okay. Next, it provides a summary of operating, investing, and financing activities, cash inflow and outflows. And it's also trying to reconcile all these three items with some changes in its cash in the beginning and how that change is going to happen in the end. Here it is marketable security means, I told you two things, cash in hand and cash at the bank. Third category, that also can be treated as equal to cash. Marketable securities. Immediately you can take that and you can sell it in the market and you can encash it into cash. But it cannot be used as a settlement system. cash we can give to somebody, we will accept. Bank balance, we can write or we can transfer or we can give a check. People will accept. But marketable security is not just used as a medium of exchange, but it can be immediately converted into cash. That's why it is added there. But normally we'll take cash and bank balance. Okay. And according to AS3, okay, it is saying about like this. Preparation of cash flow statement is compulsory. Okay, along with your profit and loss account. Nowadays, you can see balance sheet, P&L account, and one more third will be, cash flow statement. Okay, we need not to prepare. It's already companies preparing and giving to us, but smaller companies which are not supposed to prepare, they will not prepare and give it to the public. We have to prepare to analyze. Okay, but in general, companies are supposed to prepare cash flow statement and attach along with the balance sheet. Listed companies. Okay. This we discussed. Operating activities, investing activities, and financing activities. Operating means day-to-day activity, which is a core to the business and it's a main activity. Example, purchase of raw material for cash, sale of raw material for cash, purchase of stock in trade and the sale of stock in trade for cash, payment of wages and salary. Okay, investment activity, it deals with the non-current asset. I told you fixed asset, it is written here non-current asset, both are same. Okay, non-current. Example, land, building, furniture, etc. Purchase and sale of all these non-current assets are the examples for investing activities. Last one, financing activities. It's concerned with the long-term capital or it is concerned with long-term liability. Example, issue of equity share and collecting money is an example for cash inflow activity from financing, borrowing of loan or repayment of loan. Okay. Only we are going to do in indirect method the cash flow statement. Okay. Yeah. Look at this. Clear version of the same format what you have taken before the break. Okay. Look at this. Cash received from operating. 1 second. It's a direct method. We don't confuse this. How many? It's for us or somebody else? Maybe not for us. One second, I'll open another document. Yeah. Look at this. This is it visible? Those are online. I have to share it.
Yes.
No, Professor, that is not.
I'll show you 1 second. Now it's okay.
Yes.
Yeah. So this is the format, same thing what I told you before the break. It's given here in detail. Look at this. These two items. Listen. The inflow of or outflow of financing activity and that of investment activity. These two can be known from balance sheet. You remember, balance sheet is a statement which shows the assets and liabilities and equity. Asset is concerned about investing. Asset is increased means we are investing. Outflow. Asset is reducing means we are selling the asset. Inflow. It can be known from balance sheet. Suppose last year balance sheet, land and building was shown as 5 lakhs. Current year balance sheet, land and building is 10 lakhs. How much difference? 5 lakhs. What is the reason for this difference? What could be the reason for this difference? Possible. But will you record that increase of value in the balance sheet every year? Cost concept. You remember there was a concept called cost concept. We have to report only in the cost at which you bought it. Suppose every year every moment there is a change in the price of all the commodities. We don't report that. We write it in original cost, how much is spent, minus depreciation. If you have a depreciation, you will minus it. Okay. Keep this aside. Keep this reason aside. What could be the other reason for land and building shown in the current year 10 lakhs, which was shown in the last year 5 lakhs? And it means, yeah, purchased. So far we discussed same thing now. Okay, you are right. The value of asset may be increased, but that is not reported every time in the books of accounts. Yeah, this revaluation is a phenomena of very rare of rarest. We do revaluation when we go for reconstructing our business. In partnership, it will take place when a new partner is getting admitted, or when a partner is retiring or death. That time the business is reconstituted, so that time the assets are revalued. In the new balance sheet, after revaluation, the original real value, today's market value will come in. But in a regular ongoing business, assets and liabilities are not revalued on a day-to-day basis, on a regular basis. So this reason we are keeping it aside. If it is so, they will be mentioning. You have to ask. Yes, you are right. You have to ask. Whom to ask? Accountant to ask. Sir, why? What is the reason? Is there any revaluation? If yes, you have to take into consideration. But normally it is not. Then what could be the reason? As he was telling, we might have added some value to the assets, meaning purchased. There was one land and building. Now it is two. We bought. If you buy a land and building, a piece of land or a building, where it should suit under this category 3 category: investing, financing, operating. Investing, that for sure. But there are two, plus minus is there. Where it will go? Minus. Outflow from investing activities, 5 lakhs. How do I know this? Nobody tells me. I just compare the last year balance sheet with the current year balance sheet. Last year balance sheet, land and building was 5 lakhs. Current year it is 10 lakhs. If no other things are there, as you told, okay, if no other things are there, the difference between the last year to current year is just a purchase. In that way, we have to decide. In case if there is a revaluation, in balance sheet it would be mentioned. In balance sheet it would be mentioned. Notes to accounts, land and building 10 lakh is there, no? There will be a note number. You remember? Note number we prepared. In the note number, you have to go and see land and building, opening balance 5 lakhs. Some plus minuses will be there. How the 10 lakh has been arrived, it will be there. You have to refer only that in real life. But in question, we have to give you land and building has been purchased for a worth of 4 lakhs. If I say for a worth of 4 lakh means, then how that 1 more lakh has come? You have to again analyze how that 1 lakh has come. Okay, suppose 6 lakhs worth of land and building was purchased. During this current year, 6 lakhs worth of land and building was purchased. How much should be there? 5 lakh was there. 6 lakhs I added. How much should be there? 11 should be there. But in balance sheet, how much is there? Only 10 is there. In my example, 10 is there. Then what would be the reason for that 1 lakh difference? Depreciation. This is how we have to get the information. So what I try to say is, balance sheet last year and current year is required for us to prepare the cash flow statement. Another one is P&L account. Okay. So cash flow from operating activity can be known from balance sheet as well as P&L account. But cash flow from investing activities and cash flow from financing activity can be known from balance sheet. Another example. Last year balance sheet says that equity share capital 10 lakh. Current year balance sheet says that equity share capital 15 lakhs. No other information is there. If you ask the accountant, he's telling no other information, only this is available. Then what do you think that difference? How much difference? 5 lakhs. What should be the reason? New issue. We received money from new equity shareholders. Fresh issue took place. That could be the reason, if no other reason is given. Okay, so how do you treat this 5 lakhs in the cash flow statement? The difference is 5 lakhs. How do you treat that in the preparation of cash flow statement? Inflow in finance. That's it. Inflow in financing activity. Suppose there was a amount in the name of debenture last year, 15 lakhs. Current year, the debenture is 12 lakhs. Last year balance sheet says that debenture worth rupees 15 lakhs. Current year debenture says that the amount is 12 lakhs. What's the difference? How do you treat this? Outflow of financing activity. Liability has reduced. Please understand. Non-current asset increases means investment activity outflow. Non-current asset reduces means inflow of investment activity. Similarly, non-current liability increases means complete it. Non-current liability increases means inflow of financing activity. Very good. Non-current liability decreases means outflow of financing activity. Now we should understand what is non-current liability and what is non-current asset. Land and building, furniture, plant, machinery are the examples for non-current assets. Non-current liability, equity share capital, preference share capital, debenture, bank loan are the famous example or the normal example for non-current liabilities. So these two are easy to find out from the balance sheet. Okay, so you should not take directly the difference. You should read the question or you have to ask the accountant in real time. What could be the other reasons? Because we don't know, we are an outsider. He knows better than us. So we have to ask, is there any, but you have to ask with some points. So land value decreased. Did you sell any land? Yes, sir, we sold some land. And how much? In that way, you have to do the balance sheet and you have to bring that in the cash flow statement for, financing and investing. Now the problem is, or the idea we need to create is only for cash flow from operating activity. The profit is not just a amount of operating activity. Actually mean the profit is the operating activity result. The result of the company's operating activity is coming under profit or loss. But that profit or loss may not be just a result of operating activity. Suppose you given a donation to a company or to some political party, you given a donation. You might have debited that under the other expenses in the P&L account. Please connect your P&L account now. You would have charged that under the other expense column while preparing your P&L account. With the tune of that much, your profit might have reduced. But that is not an operating activity. Suppose your profit and loss account says that 1 lakh is the net profit. And you come to know there was 20,000 rupees donated by your company to one of the political parties in the local area as donation. What was the profit reported in the P&L account? 1 lakh. You have given a donation of 20,000 rupees. Now your original profit should be 1,20,000. Because donation is not an operating activity. But you already charged that to profit. So you have to now add it back. So net profit plus non-operating expenses. Similarly, you got a grant in aid from Government of India, 10,000 rupees, the same company, same year. What is the problem here now? 10,000 rupees already got grant in aid. You might have credited, in accounting language, you might have credited that 10,000 rupees into your profit and loss account. Meaning, you might have considered that 10,000 as other income. Income from operation, and second line is there, no other income. You might have added there. So now what should be your original profit? Forget about that donation. 1 lakh is reported in the net profit, and 10,000 you got as grant in aid from Government of India. Your original profit should be 90,000. So what should you do? Net profit reported in the P&L account plus non-operating expenses minus non-operating income. If you do these two, you will get the real operating profit. That's what done here. Look at this slide. Cash flow from operating activities. The starting point is net profit. Where do you find this net profit? Net profit can be found from P&L account, the bottom of the statement. You can find that. From that, you have to adjust for this. What is the adjustment? Look at this. I told an example for operating and non-operating. But here in cash flow statement, it's not just operating activity. It's an operating activity, cash inflow and cash outflow. Cash is another tag there. One is operating, another one is cash. All operating activity in general need not to be just in the form of cash. It can be in the form of accrual also. Salary is not paid. Okay, interest due but not paid. But in the profit and loss account, you would have taken under the expense column, interest expenses, one column is there. In that, you might have added the interest, which is not really paid. Accrual concept of accounting. Outstanding interest, you will consider that as an interest for the year to find out the real profit. But here, it's an operating activity. I mean, depreciation, for example, depreciation operating activity. But it is not cash activity. It does not result in cash. Outflow or inflow not happening. It's neither inflow or outflow. It's only a book entry. Payment of salary results in cash outflow. Payment of interest results in cash outflow. Payment of donation results in cash outflow. But depreciation is not at all resulting in cash outflow. It's only a book entry. What I mean by book entry? We just write it. Depreciation account debit to plant account 20,000, 20,000. This 20 will be going to P&L account in the name of depreciation and amortization. But it is not resulting in cash outflow. So what should I do? I have to add back this amount. Look at this. Adjustment for non-cash. For this, I told an example of the donation. For this, I am telling an example of depreciation. Non-cash is an example for depreciation. Non-operating is an example for donation. If anything of such nature is there, you have to add or minus accordingly. Look at this. Depreciation need to be added. Why I'm adding? Already I minus my depreciation from my total income to find out the net profit. That net profit is not a cash profit because depreciation was already deducted. It was not a cash expenditure. So I'm adding it back to find out the original cash profit. Okay. Next, plus amortization, same logic. Amortization nothing but depreciation on. Amortization is nothing but the depreciation on intangible asset. That's it. Both are same. Okay. Next, plus interest expenses. Why I'm adding interest? Payment of interest. Which activity it is? Financing activity. But we consider that in the P&L account to find out my net profit. Interest expenses. There was one sentence in the P&L account. According to Companies Act, we are minusing it. But really, interest is not a operating activity. Without borrowing, also you can do your business. You don't have money, so you borrowed. Because of borrowing, my operation does not change. Yeah, that's why I'm coming to you. It's a cash expenditure. It's a cash activity, but it is not a operating activity. Why, sir? You are studying MBA. By your own fund, you are studying. By borrowed fund, you are studying. Both are same. You are studying. Performance is based on your performance in the class or your performance in the exam. Sir, I borrowed money. Maybe psychologically, sir, I borrowed money that some pressure is there for you to perform better than others, but that is not common for everybody. Similarly, in a company, you need 1 crore capital. Whether you do it on your own money or you are doing it with others' money, no matter for the operations. That is why interest payment is already we classified. No, already where we classified interest payment. Payment of interest is which activity? Financing activity. But it was included in operating activity to find out this net profit. Suppose this net profit in the first amount column, I written some amount, some asterisk mark. No, suppose this is 1 lakh. Net profit 1 lakh was there in the P&L account. That 1 lakh is after minusing the interest of 10,000. If I have not borrowed money, my original profit will be 1,10,000. That is why I'm adding back the interest. Okay, just reverse. Okay. Next, loss on sale of asset. What is this loss on sale of asset? You sold one asset, building or anything, lesser than the book value. That time the difference between the selling price and the book value is called loss. In your balance sheet, your book value shows 1 lakh rupee, but you sold it for 80,000 rupees. The loss is 20,000. This loss has been entered in the P&L account in the name of other expenses. So with the tune of 20,000 rupees, your profit is reduced. Profit was reduced. Now we have to find out the real profit. So we have to add up. Okay, that's why it's added there. Okay, loss on sale of asset. The opposite of that. You sold an asset which was having a book value of 1 lakh for rupees 1,20,000. So 20,000 is a profit. That would have been taken in the P&L account in the name of other income. So to the tune of 20,000 rupees, your profit was inflated. Now we need to bring it down. So we are minusing it. Okay. So these are called as adjustments for non-cash and non-operating items. In the format what I gave you, I did not tell about all these things. I told you only which one? The next one. Net cash inflow from operating activity. I told you. Net cash inflow from this one. I told you. Net cash from operating activities. But it is to be found out. The base is net profit. Okay. After that, what you have to do is you have to do the changes in working capital. Okay. What is changes in working capital? What is working capital? Current assets and current liabilities. The difference is called working capital. So what you have to do is you have to find out the increase or decrease in current asset and current liability. Current assets and current liabilities. Okay. If there is an increase in current liability, what does it mean? Increase in current liability. What does it mean? Huh? Increase in current liability. Liability increases means more debts. Okay, fine. That's one understanding. Liability increases means increase in it's a current asset, it's a current liability, not a non-current liability. Suppose payment of wage is stopped. That will result in increase in current liability. Okay. You are selling more goods on debt. That will increase more debts on credit. That will increase in current assets. Debtor will increase. So these things you have to compare from the balance sheet of current year and last year. Suppose sundry debtors last year was 10,000. Current year it is 15,000. The difference is 5,000. That is increase. So what should you do? Increase in current asset you have to minus from the profit. Increase in meaning that part of money is not yet received from the customer. It's still pending. We are talking about only cash items. So non-cash, if you minus, remaining will be going to cash. That's why you are minusing. Increase in current assets, you have to minus, and decrease in current liabilities also you have to minus. Okay. Opposite of these two should be added. Okay. Increase in current liability to be added, decrease in current assets to be added. Okay. After doing this, you have to minus tax. Tax paid. Okay, to the tune of your operating activity, tax is just going up or coming down. So you have to minus tax. The remaining is called as cash flow from operating activity. Just forget about this. Okay, this won't be there in a normal business. It's according to AS3 or in AS7, it is there. So this won't be there. You remember in P&L account also we have so many items, but we did cut some extraordinary items. Okay, so you just don't worry about this. After tax paid, remaining is called net cash flow from operating activities. I once again repeat it. The cash flow from financing, cash flow from investing is simple. That can be known from comparing the balance sheet of last year and current year. Only the items of non-current assets and non-current liabilities. But only thing is operating activity cash flow, we have to find it out. How do you find it out? Take the net profit as a base plus non-cash or non-operating expenses you have to mind plus. Okay, non-operating income you have to minus. Similarly, suppose an item is non-cash item, non-cash expenditure, non-cash. What do you have to do? Add back. If it is a non-cash income, minus it. Okay. After that, you minus tax, then you minus all the change in working capital accordingly. Current asset and current liabilities. For that also, you have to compare the balance sheet. Okay. If you do this, you will get net cash from operating activities. Next, cash flow from investing activities. It is very simple. You are referring from the balance sheet. If there is an increase in non-current asset, that's an example for outflow of investing activity. If there is a decrease in liability, that's an example for decrease in liability is an example for outflow of financing activity. Non-current liability I'm talking about. Okay. So after doing this, you will get the net cash flow from investing activity and net cash flow from financing activity. After adding all these things, you will get cash and cash equivalents of the company at the end of the period. Yeah. So these cash and cash equivalents at the end of the period should be equal to the amount found in the current year balance sheet in the name of cash and cash equivalents. That's all. Okay. Is it clear? The format, the cash flow statement is clear. We can go with one question. Any doubt in this? Simple question. Okay. Before that, you look at this question. I'll share this also. Which one? This one or this one? Which one, madam? Is it visible for you? Those are online.
Yes, sir.
Yeah. Yeah. Look at this question. Cash flow from operating activities. Giving reasons, classify the following into cash flows from operating, investing, and financing activity. First one, cash sales of goods in trade. What is this? What is this for? Which activity it will fit into? Operating activity. Very good. Please, those are online. Please respond. Yeah. Now this is for online people only. Cash paid to suppliers of raw material.
Investing activity.
It's a example for
Investing activity.
investing activity. The effect of online class is there. So we can come to a conclusion that
Operating.
the teacher is not effective on online. Okay, please come to the second point, sir. Cash paid to suppliers of raw material. We are paying cash to the supplier. Okay. Why you are paying to supplier? We bought some raw material from him. Why do we buy raw material? To do some operating activity in the company. So it's an example for
Operating.
Operating activity, that to outflow. Okay. Third one. Somebody from online, please try. Cash payment of salaries and wages to employees.
Again operating, sir.
Yeah, again operating. Very good. Yeah. Fourth one, cash payment to acquire fixed asset. Say for example, machinery. Investing activity. Investing activity outflow. Very good. Then cash proceeds from issuing shares at a premium.
Financial activity.
Cash inflow from financing activity.
Finance.
Payment of dividend.
Financial activity.
Financing
Cash
activity.
outflow.
Cash
Outflow.
outflow. Yeah, that's correct. Interest received on investment.
Finance.
Financial activity. Inflow.
Interest. The investment is there. Why do you say it's a financing activity?
Okay.
It's an investment activity. Interest received on investment.
Investment.
We kept some deposit in a bank, or we bought some debenture from other companies. In that, you are getting some interest. So it's a example for cash inflow of investment activity. Okay. Eighth one, interest paid on debenture. Cash outflow of financing.
Financing.
Don't say financial, financing. Yeah. Yeah. Next. Ninth one, payment of income tax. Payment of income tax. Operating activity. Okay. Cash receipt of long-term loan. Long-term loan you have taken.
Investing.
Investing.
So investing.
Financial activity.
Financing activity, cash inflow.
Cash.
Okay. So this kind of question, can we have one?
Yes, sir.
Oh, sorry, sir. Sorry, sir. Cash repayment of long-term loan. So it's a cash outflow of Financing activity. Yes. This is easy. You can classify the activities into two. Payment of income tax is operating. It's not very much into core activity, but we are minusing there now because the tune of your profit is reduced by the tune of your tax. Or the tax is decided by your profit only. Profit before tax, the base for calculating tax. Tax is the base. Tax is the denominator. I mean, we are deducting tax to find out your net profit after tax. In that way, it is operating activity. Otherwise, it's not. Okay. Otherwise, it's not. You take an example. GST paid. Input credit you are taking. The difference, what you are paying. That's again operating activity. Without that, you can't do the business. Okay. You are a dealer registered under GST. You pay GST. Okay. After that, you are getting input credit. The difference between these two, if there is any liability you are paying, that is going to be a operating activity. Okay. I know. You can argue that how tax paid can be a finance, I mean, can be a operating activity. You are having a valid point. Without payment of tax is artificial one. Tax is highly artificial. It's depending upon the land where you are in. In some of the countries, it is not there. In some of the countries, it's less. We have too much. So in that way, you can argue how it can be a income tax paid. I mean, corporate tax paid can be a operating activity. You can ask a question. That's a valid question. But how it can be a financing activity? It need to be a financing activity. We are all happy. Government gives some help to us. For that, we reciprocate the government by paying some tax. If that is the case, it is financing activity. In some film, they're asking, what you are paying to us. We are paying so much of tax to the government. Simple example, 2.5 lakhs, Mr. X is paying a tax. For his son, if he wants to admit in a school, he has to pay again 1 lakh rupee to the school for the admission fee or some tuition fee, another 1 more lakh. So that government is not, it's again, there was very clear idea in India. Tax is not something you are giving something for a facility what a government is going to offer for you. No. That's very clear. Canon of tax. Okay, principles of tax. It's very clearly saying that the tax what you are paying is not the consideration for the facility offered by the government. No. You can't claim like that. Suppose in a school you are paying a fees. It's a consideration for the education. It's a price for the education. You can go to a consumer court. Water bill we are paying, water tax we are paying. That is a consumer court jurisdiction. But income tax is not that. Corporate tax, individual income tax, companies, corporate tax. It is not a consideration for the facility offered by the government of India or government of any country. It's a duty on your income. Duty. Duty means not the normal duty I'm saying. Job. Duty means what? Duty refers to a tax. Excise duty, customs duty. In that manner, duty. It's a duty on income. In that way, it's not any activity. Why we take here as a operating activity? Because net profit is influenced by tax. That's why. Okay. Right. So look at this small question given to you. Yeah. The net income reported in the income statement of a company is rupees 1,10,000. Okay, 1,10,000. And depreciation of fixed assets for the year is 44,000. The balance sheet shows the following details about the current assets and current liabilities at the beginning and at the end of the year. Okay. Calculate cash from operating activity. Please look at this. The other two parts are very easy, so I'm not doing that. I'm just telling you how to calculate the cash flow from operating activities. Investment and financing is very simple. How it is very simple? Just now I told you. 1 lakh was the equity share in the last year. 1,20,000 is the equity share in the current year. How do I know? By comparing the balance sheet of last year and current year. The difference of 20,000 is an example for cash inflow from financing activity. So we'll go and write it, that's all. In the cash flow statement, under the heading of cash flow from financing activity, point number A, issue of new equity share capital. How much? 20,000. You will write like that. Okay. So I'm not talking about that. I'm talking about how to calculate the first one. In our small format, the last one. Cash flow from operating activities. Okay. Take it this. So current year profit is 1,10,000, depreciation is 44,000, and the balance sheet says these two, end and the beginning, some current assets. Okay. So how do we calculate? The starting point is, please write down, calculation of cash flow from operating activities. Calculation of cash flow from operating activities. Calculation of cash flow from operating activities. The starting point. Net profit. Net profit as per the profit and loss account. Net profit as per profit and loss account. 1,10,000. So I will refer the current year profit and loss account. In that current year P&L account, how much is there, that I will take. 1,10,000. Which one? Yeah. Two amounts that you have to check it. In the question you are talking about, no? In the question you are talking about, right? In the question, format. No. It's not previous and current. It's only a workings. Workings only. It's not. In cash flow statement, we don't bring any previous and current, only the difference, only the result. Okay, it's only for adding and minusing, that's all. Two columns are there. Okay, it's not about previous year and current year. Say for example, yeah, see, only in two columns, only two amounts are there, 14,000 and 23. Remaining all in only one column is there. Two column is only for plus minus. Okay, net profit is reported as 1,10,000, so I've taken it. If there is any depreciation, normally it should be added. Why it should be added? What's the reason? It is a non-cash expenditure. That's why it is added. Though it is a operating activity, it is not a cash activity. So I am adding it back to find out the original profit without depreciation. Okay, if you add the depreciation, you'll get 1,54,000. That is called operating profit before working capital changes. Then I have to talk about working capital changes. I have to account for working capital changes. Adjustment for working capital changes. Now we look at the question. There are some assets and liabilities given. Current assets and current liabilities are given. Look at the question. I'll just take you to the question. Look at this. Cash balance, we need not touch. Cash only is the starting point in the cash flow statement. Look at this. This 1,30,000 is there now, end of the year, and 1,40,000 beginning of the year. What should be the starting point in cash flow statement? This 1,40,000. This is the last line in the cash flow statement. Cash and cash equivalents at the end of the year. Okay, but we are not doing that. We are doing only one part of the cash flow statement. What is that? Cash flow from operating activities. Okay, that cash balances you have to use only when if you do cash flow statement. Beginning of the year is a starting point. End of the year cash is called last line in the cash flow statement. You remember, I have given you a small statement. No, in the statement, you started the statement with opening balance of cash and cash equivalents, right? If you do cash flow statement, in that first line, which one you should take? You will take 1,40,000. You will take, and the statement will end. Look at the last line of the statement: cash and cash equivalents at the end of the period or closing. That one should be 1,30,000. Okay, if you do the entire full-fledged cash flow statement. But now we are doing only 1/3 of that, only one activity. In that, cash opening, cash closing will never appear. Okay, right. Now, remaining current assets. Of course, cash also current asset. Why do we don't consider? Why don't we consider here? Because that is considered as an opening point and ending point. Okay. Remaining current assets. Debtor. End of the year is 2 lakh. Beginning of the year is 1,80,000. Is it increased or decreased? Increased how much? 20,000. So what should you do? Increase in current asset. Increase in current asset. Just now we discussed. No, increase in current asset should be added. Look at this. Minus in current asset to be added. Plus in current liability to be added. If there is an increase in current asset, that need to be reduced. What's the logic? If debtor is increasing means our money is there with the debtor. We have not recovered it still. So we have to minus it. So increase in, please write this in your notebook. Increase in current asset and decrease in current liability need to be minused. Increase in current asset and decrease in current liability need to be minused. Decrease in current asset and increase in current liability need to be added. Decrease in current asset and increase in current liability need to be added. Okay, based on this logic, you now check it. Debtor is increased by 20,000. Inventory is reduced by 10,000. Prepaid expenses reduced by 1,000. Okay, accounts payable is reduced. See, look, don't go by this order. Okay, order means what? First column and second column. You look at that word given there. First column is talking about end of the year. First amount column is talking about end of the year. Second one is for beginning. So you have to check accordingly. Now we come to the statement. Yeah. Decrease in inventory 10,000 added. Decrease in prepaid expense 1,000 added. And then increase in debtor minus 20,000. Decrease in accounts payable. Decrease in accounts payable is liability. So minus. Okay. 14,000. Minus means I written in bracket. Okay. This total, this sum of these four values in the first amount column, there are four values now. The sum of this is brought here. 10 plus 1 is 11. 11 minus 20 minus 14. Okay, brought here. 23,000. The 23 is minus. So already we have 1,10,000, 44 and 1 lakh. Sorry, this is already done. Already done. 1,54,000 is there. From that you have to minus this 23,000. If you minus that, you'll get 1,31,000. 1,31,000. That is the net cash flow from operating activities. What you have to do with this amount? This amount is the one part of the cash flow statement in the name of net cash flow from operating activity. Yeah. No. This also need not to be done separately. You can do in the statement itself. You can do in the statement itself. You have to start with opening balance of cash and cash equivalents. Then add point number A, net cash flow from operating activities. Do all these things, whatever you have done. The net amount, this amount you have to take it to amount column in the cash flow statement. Similarly, point number B, cash flow from investment activity. Point number C, cash flow from operating activity. Then finally, four amounts need to be added. Opening balance of cash and cash equivalents, net cash flow from operating, net cash flow from investing, net cash flow from financing. These four are added according to symbol, sign, then result. should be equal to closing balance of cash and cash equivalents in the balance sheet. Okay, so this is how cash flow statement is prepared. Now, please take all of your mobile. Any one company will go and check their cash flow statement. Which company? Manufacturing company, you tell. Which one, sir? HCL. HP. Okay. Commonly, sorry, HPCL, are they not trading? They're trading. Okay, HCL, computer. HCL. No, you told HPL, yeah. Okay. Any company you take, no problem. Any one company of your, any company of your own interest, any listed company of your own interest in India, yeah, you take it. Take and check for their cash flow statement of 2021-22. HPCL, somebody is telling HPCL you take, or any other company of your interest you can take. It is net connected. I will also open here. 2021 will be there. Yeah, you take it. Which one? Now, all companies should publish it. It will be there. I am checking for that company. If you go to the company's website, it is easy to check it. It's in Excel format. Somebody might have taken and kept it, or they might have kept it like that only, but it should be in the annual report. It will be there annexed to the annual report. Yeah, look at this. Yeah. No, this is not the one what we are expecting. Anybody got in a PDF file?
So you can check for TVS Motors. It is a good one.
Yeah. Just to take it and go through that. You just check it. Somebody telling TVS, you can take that also. Check for that is the same way they have done it or different. Same way it is there. Yeah, it is there. You can share in the group. They can see. Yeah, please go through that. It's not compulsory to go to only one company. Any company of your choice, just to have a look. That's all. Yeah, net cash flow from operating, net cash flow from investing. Somebody shared in the group now. Check it. So it will come along with the financial statement. Actually, it's also included in financial statement nowadays. So will you be able to prepare it if it is given to you? Are you meeting once again or this is the last class? Last class. Also, no, that real-time balance sheet we're talking about. We are not going to give you in the exam the real-time balance sheet. No. Yeah, I understand. Yeah. Yes, it will be having some kind of mismatches. We'll pronounce in some other way. That will be reported in some other name in the real-time balance sheet and the P&L account. That will be there. You have to. Good. It won't be there now. It won't be there. Cost of goods sold, how they will, with the older format it was there, but now it is not there. No, income from operation plus other income. That's all. You have to find out the cost of revenue. How do you find out? Third sentence in the P&L account is expenses. No. Number 3 is expenses. Under that we have 7 expenses. So what is cost of revenue? Cost of revenue is nothing but the sales minus gross profit, but that cannot be done because GP you don't know. So how do you find out? Another way of doing it: opening stock plus purchases minus purchase return plus direct expenses minus closing stock. All these are there in the statement. You won't get the ready-made food there, but ingredients for your food is there. You have to take and you have to mix according to your taste and you have to eat it. That's all. Meaning cost of goods sold or cost of revenue, both are one and the same. First you have to come to that understanding. Some places will use the word cost of goods sold. In some other place we'll use the word cost of revenue. Both are same. Okay. How do I find it out? Very simple. Gross profit is minus from sales is equal to cost of goods sold. But in this P&L account, we don't have the word at all. Which one? Gross profit. So we can't go by that method. Sales minus gross profit is equal to cost of goods sold. Or cost of goods sold plus profit, gross profit is equal to sales. This you have to understand first. Next, sir, it is not there in the today's P&L account of any company. Yes, it is not there. But how do I find it out? Go another method. What method it is? Cost of goods sold is nothing but how much I spent, how much my company has spent on the goods to be available for sales. How do I find it out? Opening stock of material plus purchase of material minus purchase return plus direct expenses, any making manufacturing expenses, direct expenses minus closing stock. Simple logic. How much I had before I start my production process? Sir, I had 1 lakh worth of raw material. I bought 10 lakh worth of raw material. Total is equal to 11 lakhs. Okay. At the end of the production, I still have 2 lakh worth of raw material not used. So how much material I used? 9 lakh I used. I paid wages for converting the material into finished goods, 3 lakhs. Now how much my total cost? 12 lakhs. Okay, suppose I returned 50,000 rupees worth of goods to my supplier. That time, you have to minus that. So in that logic, you have to find out the cost of revenue from operation or cost of goods sold. Okay, there are so many mismatch of wordings will be there from what we speak and what the companies are speaking. Okay, that alignment is not coming. Why means they're changing again and again. Companies Act will change again one word. Previously, cost of goods sold was there in the format, but now we will give you in the same way what we pronounce the words, terminologies. Yeah, we divide that into 3 parts. We normally divided that into 3 parts. It's like a question. 3 questions, 15 mark each. That is a question. No. Example. Example. Yeah. Let us finish. Yeah. Anything can be there. I'm telling you, it's 3 questions. 3 independent questions can be there, or sometime only 1 question, 3 activity, 3 into 15, 45 marks. But that is reducing your mark. I have seen the so many exams. 1 question and 3, 1 case and 3 questions, that reduces your mark. So I'm planning to give you independent 3 questions. If you don't know 1 question also, you can know another question. So sometime better. That's my learning from the past examination. So I thought of giving like that. Yeah, in our case, everything is case study only. Okay. Everything is case. In accounting or finance, we are using the word no, suppose, for example. That itself is a case only. In marketing, you have to bring something. Okay, but in HR, you have to bring something. But here it is everything from the day 1, except the accounting principles and the convention. Everything is, this is also one case. What you have taken is small 1,10,000, 44,000 depreciation. That itself is a case only. So in that way, 1 question will be given, another question, 3 questions will be given for 45 marks, 15, 15, 15. But if we decide now, then you can go with that only, means I will not give, then it's a problem. So possibility, 15 mark, 3 questions without choice. What's the possibility? Ratio analysis is a possibility. Full-fledged cash flow statement is a possibility. Yeah, 1 cash flow statement. 1 cash flow statement, that's possible. Okay. Cost sheet alone, only 1 cost sheet with the detailed information. Cost sheet. Okay. Definitely journal we cannot ask you in the 15 marks. Okay. Somebody will laugh at us if they see the question paper. It's 11th standard question. Okay, let us not deviate. Come back. Ratio, cash flow, cost sheet. But cost sheet is having lesser probability, because we can have financial statement, P&L account and balance sheet. If I give you 1 trial balance and some 5 adjustments, from that we can make 1 balance sheet and we'll make 1 P&L account. That is worth for 15 marks. Together. So I used to give like that previously, some 35 transactions, just like your first assignment. Some transaction. Okay. Prepare journal, ledger, trial balance. 1 part, 15 mark. For the same company, prepare P&L account. 2nd part. For the same company, analyze it, ratio analysis. I used to give like that. And transaction also I won't tell. I will tell this is a company, like that. You assume. But problem is nobody is able to sail through that 5. That 45 mark I used to give only 15, 20, very less, because you are not connecting that from 1 to 1. So we can go with independent. Okay. Any 1 question, but not from journal, not from ledger, not from trial balance. Meaning these 3 concepts will not be fitting for case studies. That's what we're deciding now. But it can be in 5 marker or it can be in 10 marker. Okay. What else is there? That's all.
Sir?
10 question.
Hello?
5 marker option is there now. You would write 3 questions only, but we'll give you 5 questions. Yes, 3. Similarly, in 10 marker, internal choice, yes, internal choice. In 10 marker, how much choice is there? 45 plus 15, 60. So you write 4 questions in 10 marker. Yeah, consumer question paper. You write 4 questions for 10 marker. In that also choice is there. Maybe 6 or 5, I don't know. It is there. 45, 15, 4 into 10, 40. 40. Okay. 10 marker, what can be possible? Journal separately. Only journal. Okay. Separately. Only trial balance. Only trial balance. Some theory question from the first module. What is that? Accounting concepts and conventions. Users of accounting information. It's very open secret. Subject is this much only. 100 mark you have to take a question paper. So we have to include everything more or less. Okay. Theory question is users of accounting information. Then this one, principles and users of accounting information. Internal users, external users, I studied no long back. And then accounting concepts and conventions, I told you. Business entity concept, money measurement concept, objectivity concept. There are so many concepts now. That one. That's about first module. What else is there in this first module? That's all. Second module, first module is having this IFRS. Just now it's spoken about, no? IFRS. It can be for 5 or some case it will come for 10 market. 10 market is too much, but sometime it can be asked. Okay. Second module is about financial statement. I can give you only one trial balance and ask you to prepare only P&L account or only balance sheet for 10 marker. If together means section C, 15 marker. Only one, only P&L account or only balance sheet, that can be suitable for 10 markers. Okay. And then third module. Sorry, one more thing, 1 second. Marginal costing, that break-even point is there now. Break-even point, margin of safety, PV ratio, all these things put together, little bigger problem, maybe for 10 mark. Calculate BEP, break-even point, for different levels. I'll give you different situations. You can calculate BEP if it is so. Or PV ratio, simply marginal costing. Very simple and easy chapter also, marginal costing. Please, 10 mark, secure fully. Okay, BEP in units and BEP in value. Break-even point in rupees and break-even point in value. If cost sheet is not there in the section C, a simple cost sheet can be there in the 10 mark cost sheet. Okay. After that, ratio analysis. Theory can be asked in 10 mark ratio. Simply, I'll ask you, what do you mean by ratio analysis? Explain the different ratios. What you can do? Meaning, formula, take some number, substitute in the formula, write the answer. That's it. Over. 10 mark, you decide how many ratios you are able to give. Not more than 10, not twice. More than 10 is not twice. Okay, but 5 only you are giving means you are reducing your mark. Okay. Then yeah, tools for financial statement analysis. Theory, very pure theory. Tools for financial statement analysis. Full theory. You list out all the tools, explain minimum 4 to 5. One paragraph. Please, all of you remember, in exam, you have to write more. Meaning, theory question you are selecting means not like only one paragraph. 10 marker means minimum should go to 3 to 4 pages. It should. You talked about 3 to 4 line. Paragraph. Paragraph is very subjective. I write only one word, I can say it's a paragraph. Page is objective. For you also 1 page, for me also 1 page. Again, you can take a call on that. 2 lines, 1 page. Those days, 10th class exam, we buy one ink pen. That ink pen will be very bulk. You remember? Yeah, we can write big letters. So we can fill the pages. We used to compete with others. Who is going to ask the first additional sheet in the hall? But that is not required now. You write reasonably elaborative. Okay. I'm just telling pages, but it's not like page no matter, but reasonably you have to mention the elaborative points. 1 paragraph, only one. What your problem is, bullet point, you will write it just like a WhatsApp message. Bullet points. information, users of accounting information, creditor, supplier, government, right? You list out that and explain at least 4 points if it is 10-mark question. If it is 5-mark question, at least explain two points. That, yeah, just an example I'm telling. Again, it's depending upon the length of the question paper, you decide how it can be done. But minimum reasonable explanation should be there. Not only a bullet point, telegraphic language. No. Okay. Anything I missed? Ratio, I told you. Question, ratio analysis. Cash flow, I told you. Final accounts, I told you. These three are very, very important. Yeah. Cash flow, financial statement, and then ratio. Ratio, cash flow, financial statement may be expected for case study. Okay, you already written. Okay, first point that only written, no? Okay, knowing about this is not important. You have to prepare for this. That's very important. Okay. Not R, only P&L account and balance sheet. If it is for 15 mark, if it is for 10 mark, either balance sheet or P&L account. But if it is coming in 15 mark, there is no lesser probability for 10 mark. Again and again, we can test in the same concept, no? Yeah, you are rating 100. Now, suppose you are getting 100 out of 100, you will get 40 out of 40. Mark score divided by 100 into 40 is the calculation for scaling down to 40. 30 plus 30 in assignment, no, plus 40. Anything else? If needed, one more class, we can have only online. If needed, if you are requesting, if you are demanding. When is the exam? Already schedule is out now. 11th June is the exam starting. Saturday, Sunday. 12th is Sunday. Okay, so 12th we have some time. If you need one, just a glance, I recall. Yeah, maybe kind of. Not necessarily to come here. Online we can. Yeah, minimum mark is 40. 40 out of 100. What is that? 40 out of 100. Out of 100 marks, a paper, you have to score minimum 40. But I think put together is 50%. Suppose in first assignment you got 10. Second assignment you got again 10. So totally 20. In the final exam, written paper, you should get minimum 30 out of
40.
I'm confusing you. See, your aggregate should be 50%. 40% you are getting there, you are passing. Okay, fine. 40. Suppose in internal you don't have 50%. Then you'll fail. You're getting my point. Total should be more than 50. The aggregate. Internal 1, internal 2, A1, A2, assignment 1, 2, plus final exam. Put together should be minimum 50. Independently, in out of 100, you should have 40. Okay. 40%, 40 mark out of 100. Suppose in final exam, you are getting only 40. Only 40. Okay. That will come to how much? 40 by 100 into 47, how much? 16. So here you should have already 34. 34 by 2, 17. Out of 30, you should have already secured 17 in assignment 1 and 17 in assignment 2. You can have like that. 17 is the bare minimum for assignments. There it is 40 out of 100. Okay. 17 plus 17, 34. 34 plus 16, 50. Border.
Sir, our accounting assignment
sir.
is graded, sir.
Yes, sir.
Accounting assignment graded from your side?
Yeah, it's not done, sir. It will be done.
Okay.
Second assignment, somebody not submitted. Somebody is mailing me, WhatsApping me the assignment. Please don't do that. If you've done it, please contact office. Mailing also won't work because I can't give you mark if you're not submitting there. They are not taking from Excel sheet from us. They are taking in the downloaded LMS copy only. So in LMS, you're not turned up in the assignment section, your mark will be 0 only. So please take care of that. If anybody is like that, please message me. We'll sort it out and we'll finish it. Otherwise, Aravind is the best person to contact. Politely contact him and get the work done. Okay. If anybody is having that problem, somebody messaged me. I also messaged back. If anybody has that category, please come to me or come to Aravind. You can, Mr. Aravind, and you can finish it. Yeah. Anything else before we close for today? What's the time? Oh, we have taken already, 15 minutes less we have taken. Yeah. We're taken. Yeah. Yeah, I was also like you in the today's morning. I came late. Yeah. Due to that, I was not able to come by 9 o'clock, 9:30. Yes. So it's not just for timing. You tell me if anything is there. For cash flow statement also, please take a 12th standard textbook. Okay. Same way what you have done. It's clearly explained over there. You can just go through that. Okay. Simple questions. Not we understand. The logic should be understood by you. That's all. It's not like you are going to solve any question. You are not going to become a teacher or something like that. You would understand. If a cash flow statement is there, what is it and how we can read it? How do we interpret that? Rather preparing a statement, you should be understanding how to interpret that statement. How do we understand the statement? That is important. It's not like given a balance sheet and you prepare a cash flow statement. Okay, that CAs and others will do. But I'm not telling you should not be in that category. You can do that, but question paper will be in that manner only. Not too much tough about the BCom or CA at that level. Accounting for managers, in that manner only we set the question paper. Failing is difficult. Failing is very difficult unless otherwise you decide it. So I will challenge you. Then you can. You go through whatever you have done so far. Okay. Normal, reasonable preparation. I'm not telling you need not prepare anything or something like that. You normal, reasonable, dedicated preparation before the exam. Whatever you have done, you go through, take it, once again, revise it. Okay, then it will be taking you through. There is no difficulty on that. Write all the questions. For 100 marks, you write the question. You just give some space to give mark. Don't give space for writing answer. Second one, no teacher will do. Okay, first one, every teacher prefers to do. So please write. Somehow, suppose it's very difficult question, you don't know at all. Just think, recollect, relating to that, you can bring it in theory, something like that, you can bring and write it. Okay, somehow it can be related, somehow. Okay, so attempt is very important. You should go to the exam hall, it's online or offline? Offline exam. So when you go to the exam hall, you should be prepared to all the questions. You have to write all the questions. If you don't write one question, then you are increasing the probability of failing. If you write all the questions, you increase the probability of passing. Okay, step mark will be there. So many people ask, such step mark is there or not? Step mark will be there. We teachers will be interested in giving you marks, but you should be having some space for that. Okay, suppose case study, you don't know. One question is there, you don't know. Somehow format or something might have been coming to your mind that time. So you have to use that and recollect and write it. Some mark here and there. Suppose you are having 36. Assume a poor student, he secured 36 as usual. Before close your answer booklet, what we will do? We'll search for somewhere where we can give the 2 more or 4 more marks to just take you to the next level. I mean, passing. That is always done in not only our courses, every colleges, every courses will be done. But you should have some space for that. Suppose you missed out that question, you did not write maximum is 36. What can I do? We can't help you. So please don't miss any question. Write all the questions for 100 marks. That's one basic criteria. Okay. Prepare, and anytime evening, you can call me for any doubt or anything. One more session, you just, if you need, I'll tell the college to arrange it only online. We can have little more elaborate discussion with specific doubts. If you have anything, you go through first, start preparing, you'll get some doubts. So again and again, I'm telling you, +2 textbook, if you are not downloaded yet, please take it. +1, +2, journal, ledger, trial balance, 11th standard. Okay, cash flow statement, ratio analysis, all the cost accounting, all these things, 12th standard textbook. 11th and 12th CBSE book, download, and at a glance you go through. Okay, ratio, without knowing the formula, please don't go to the exam. Formula is very much important. Definitely, it's an open secret. Definitely one question is going to be there on ratio analysis, either directly or indirectly. Directly means without giving you data, I'll ask you to create a data and do it, maybe. But for that also we need formula. If I give you a balance sheet, I'll ask you to analyze the company's performance. For that also we need formula. So please understand the formula. I don't say memorize, but understand the formula and apply it. And 2-3 times read the question. It's again a problem I have learned from you, your seniors. 2-3 times read the question, confirm what is that question. If you don't know, please ask that examiner. Who is going to be examining you? Only these people, or we are going to come? I don't know. But please don't hesitate. If you don't understand, not answer the question. Suppose the wording, some words, you may not be used to that words. If you really have a doubt, you can stand up. It's right of the student. You can ask, sir, this area I'm not understanding. Can you tell me what is this question about? Sometime it may be possible. Some words you may not be knowing. You can very well ask. There's no problem. Okay, they will tell you. Okay, that's another thing. Don't miss out that question. I don't understand the question, so I missed out. Don't do that. Okay, so these are the things I want to tell you today. And any more thing? Anybody is having anything to ask finally in this class, or to say something? You will get the mark by Monday, tomorrow evening, for the because I have done something. I did not return it. If I return for 1 student or 3 students, everybody will keep asking me, sir, I did not get the mark. So I kept it not to be shown to the students. So I will release that after finishing everything. Maybe tomorrow I'm little free. I will do that and give you. You'll don't worry. Assignments, you'll get decent mark. And don't call me back if you see the mark. So I was expecting 31 out of 30, but you've given only 25. Whatever is given, please accept. Rarest case, if you really have a problem, sir, I have given 0. Sometimes it happens. We type 2 0. Sometimes 2 is not typed, only 0 is there. That time you call and ask me and clarify it. Otherwise, decent mark, reasonable mark based on your work will be given, that you accept. Okay, there was one student last year, I think, keep on asking. 25 I have given. 25 is the max to max. Out of 30, 25 is the, he's looking at me, why sir? 25 is not good mark. 25, 26, 25 is the maximum. 30 is not possible. 25, so you can get that. Real, I'm talking about out of 30. Yes, in your other subjects, I'm little conservative. Marks are exam. I already told that secret. I already told you. 26. I mean, brought to 36 will brought to 40 if there is a possibility. Okay, so that's all the semester. Anything else? Anybody would like to ask final before we close for today? Already we are exiting time. Please prepare at least minimum 4 questions for all these questions what I told you. 4 independent questions. Ratio means work out 4 questions. Be comfortable. Ratio comes, I can do like that. 4 questions for each and every. Yeah, this also is there. I'll upload. Today evening I'll upload. I'll do that. If not done, you can just call me and get confirmed. Yes. Sir, online, madam, anybody?
Yes, sir.
That's all. No problem.
No problem.
That's good. So can we close it?
Okay, sir.
Yeah.
Thank you very much,
Okay,
sir.
thank you. All the best. Do well in the exam. If there is any doubt or queries, please call me or mail me. In the evening, you can call. If it is required anything to call and ask, you can call me in the evening after 5 o'clock or 6 o'clock. Thank you so much for attending this course. See you again, if possible, next semester.
Thank you, sir.
Thank you, sir.
Thank
Thank you very
you.
much, sir.
Thank you.
Thank you, sir.
Thank you.